Wamsi, I want to start with you. You're most excited about fitness. You wrote it has a $2 billion in revenue potential. Peloton didn't even make $1 billion last year. They also sell, of course, hardware with the bikes and the treadmills and so forth. Where do you see the opportunity for Apple here? And do you see it taking share from some of the other legacy fitness providers out there?
Hey, Leslie, good morning. So, the opportunity really resides within the install base of Apple Watches. If you think about, how many particular users there could be for Apple Watch install base globally, there could be close to 100 million users. So if you think about, penetration of those 100 million users incorporating both families and a penetration rate within the aggregate install base and apply the subscription, annual subscription numbers to that, you can get anywhere between $1 billion to $2 billion. So within the range of Apple, this is very possible. And that's a bull case scenario, as we alluded to in our note. Now, at the same time, are they going to take share? They're going to take share from a lot of other fitness apps. I mean, there are a lot of apps today that people pay for within the App Store where people are using it for tracking various things, for training for marathons, for a whole host of activities. And so there's free feature functionality, but there's also a whole lot of things that people pay for fitness. And this makes it really easy for a family to enjoy something at a very, very attractive price point.
Pierre, how much of this is kind of opportunistic, sign of the times, and does it have staying power beyond the pandemic? They announced their blood oxygen monitoring through the Apple Watch. They've got this kind of digital content offering. Assuming things eventually go back to normal, will these things still be as much, in demand as they may be right now?
It's a very good question. No, I definitely don't think it's just in the air and related to the pandemic. Concern about health and your body and being able to track it and create an environment in which you get more control on something on which it's difficult to have a clear perspective is very important. I think it was there way before the pandemic, and the pandemic is just stressing it out and making it more visible. And actually, I'd like to take a step back and say everything Apple is doing today is very, very thorough, very fundamental. There are two things in yesterday's announcement that I really thought were interesting. The first one is this fitness subscription and Apple One, which I interpret as moving dollars away from hardware and into service and subscriptions. And then the other one is the fact that Apple is introducing a low ASP watch, a cheaper watch for the low end of the market, and is actually beefing up very significantly the hardware of the higher end watch. And you see the same thing on the iPad. So what Apple is doing here is actually expanding the potential install base of users with lower price points, and actually taking benefit from all these affluent consumers who still have very good purchasing power, are stuck at home, travel less, go less to restaurants, and are going to spend more money on iPhone, on Apple hardware. And that strategy is probably the right one. But the thing I really stress out is that this is a strategy that is going to cost on hardware gross margins. As you do that, you put a lot more hardware in the higher end model in order to justify a higher end price. And you give away points of gross margin with more aggressive pricing in the lower end. What's going to be very interesting is to see how that plays out for the iPhone in a few weeks.